Hello everyone, this is Jay, and in today's video I wanted to give you an update on my growth portfolio. I also want to show you the buys that I did in the last week, and if you notice something different in my chart, I've added a new position to the portfolio, which is right here at 8.4% of the portfolio, ticker symbol GOOGL, name of the company Alphabet. So yes, I did add it on the dip last week, and I'm gonna show you guys the poll that I made also on Google, and I pretty much went with what most of you guys are doing right now with that company. All right, so let's go right into the updates tab right here. And as you can see right here, my first purchase was on January 31st, and it was $5 on Tesla. Tesla took a dip into the 180s, and I definitely started buying again. I bought a little bit more of Tesla. I've been buying $5 every week, but this one I made an exception on that day. The share price was at $189.64. Then on February 1st, I went ahead and made a decision and took advantage of the dip on Google, ticker symbol GOOGL, and I put $40 from the cash that I had on the sidelines, pretty much just waiting to go into the portfolio and start getting to work. So the share price was at $141.33. And I'm glad I added this position right here. I pretty much put a pool, which is right here, and I put Google stock price went down almost 7% after announcing earnings beat. EPS for quarter four of 1.64 or $1.64 compared to EPS of quarter four of 2022 of $1.05. What is your opinion on Google? So a lot of you, 66% of you, said that you are buying. So I pretty much went with the same approach that you guys are taking. And I was like, you know what? I gotta add Google. I liked it. I've been doing some research on that one for some time. It's one of the stocks that is in some of my ETFs, and it's pretty much like at the top on some of my ETFs. So I'm like, you know what? I want to add this company. They continue to grow. We're gonna take a look in the stock analysis tab so you can see the numbers, some of the numbers that I really liked on the company. But let's finish the updates right here with all the buys. And then on February 2nd, I made my other purchases, my regular purchases, which was $5 on VGT, Vanguard's Information Technology ETF, one of my favorite ones, actually. This one is definitely gonna, for me, in my opinion, of course, it's gonna multiply my money very, very well in the future. Share price was $506.21. Then Tesla, ticker symbol TSLA, $5 on February 2nd. Share price was at $183.62. Then my Fidelity Zero Large Cap Index Fund, FNILX, $5 also. Share price was at $17.54. Then Google, I bought another $10 because the price was down. It was under my cost. So I was like, you know what, let me put a little bit more extra. So I put into Google, I put another $10. Share price was at $141.03. Total purchases in the last week, $69.32. And let's go into the stock analysis tab right here. Which is Google, ticker symbol GOOGL, name of the company's Alphabet. This company has a market cap of $1.79 trillion. Their earnings per share, it is 5.80. Their PE ratio, 24.77. Then the forward PE is showing at 20.72, so there might be some undervaluation in the future. But of course, that's just prediction. That's not real numbers. 52-week range. It has a 52-week low of $88.58. 52-week high of $153.78. Analysts are calling this a buy. I had to agree with them. Definitely a buy in my opinion also. So if you've seen the last 5 days, it is down 5.97%. It took this dip right here, which it brought it down to pretty much 7.5% for the day. And I definitely took advantage of that. I bought, and I don't think I'm gonna regret this decision. I think it's gonna be one that is gonna do good for me. I missed this right here when it was in the 130s. If not, I would have deployed some money and made another purchase. This was while I was at work, so most likely I was busy. But I would have bought more if I would have caught it right here in the 130s, 137, 138. So definitely missed that opportunity. I would have put some more money, probably more than what I had in cash. I probably would have made a deposit, made a little sacrifice. So as you can see right here, in the last month, it is up 5.42%. In the last year, 39%. In the last 5 years, 156%. So if you bought it 5 years ago, you will have a 156% return. This company doesn't pay a dividend, so this 156% will be in share price, which is great. Financials, as you can see right here, they already added the 2023, and if you see in 2014, they had a revenue of $66 billion. In 2018, $136 billion. 2021, $257 billion. And 2023, $307 billion. So as you can see the chart right here, they just continue to grow that revenue and grow and grow. So this was one of the stats that I really, really liked about Google. And if we continue to look at some more of the stats right here, let's open the shares outstanding tab. And as you can see, they had 13.5 billion shares in 2014. Then in 2017, they had more. So they had 13.8 billion shares. But then in 2020, they started going down and buying back shares at 13.5 billion shares. In 2022, 12.9 billion shares. And then in 2023, 12.5 billion shares, which is great. This is a great sign right here. They're buying back shares, which is awesome. They also distribute share to their employees pretty much as a package. So they do that also for their employees, which some people don't like actually. That they're diluting the shareholder. That's what people are explaining. They're diluting the shareholder by giving shares pretty much as a compensation package to their employees. I'm kind of okay with that. Why? Because that will motivate people to work for them, and you know, as long as they're doing it properly, I'm sure this keeps people motivated to work in Google and to get the best out of them. And you can see the revenue is growing. So that is something good to also reward their employees. I'm all in on that, honestly. Some investors don't like it. I'm all in on it, you know, honestly. As long as they don't do it irresponsibly, right? But I'm all in. You gotta reward the workers in your company for sure. EPS, earnings per share, as you can see, it continues to grow also. Everything is growing. Everything is looking really, really good. In 2014, they had an EPS of $1.05. 2018, $2.21. 2021, $5.69. And then 2023, $5.84 EPS. So that's definitely looking really, really good. Let's take a look at the free cash flow also, which is what they use pretty much to pay their debt and continue to buy back shares. And as you can see, in 2014, $12 billion. In 2018, $22.8 billion. In 2021, $67 billion. And then in 2023, $69 billion. So they just continue to grow their free cash flow, which is awesome. Let's take a quick look at the debt. And let's go into the balance sheet real quick. And as you can see, the debt, it is growing. But they have been paying off debt in the last year, which is good. In 2014 and 2015, they only have $5 billion in debt. So they have very low debt. And then they started acquiring some debt like in 2019 at $14.7 billion in debt. and then 2021 $26.2 billion in debt, but in 2023 they went down to $25.7 billion in debt. So it looks like they're paying off debt and they're buying back shares, which is awesome. I like the way the company is going. I like their numbers. I do believe Google will continue to grow in the future. Let's go ahead and take a look at the forecast. I don't go into the dividends because they don't pay a dividend, and I'm okay with that. I like for the company to continue to buy back shares, continue to reward the shareholder in that way, and then I'll take my gains later on in the future in a couple years from now. So as you can see right here, the analysts are calling this a consensus buy. The lowest price that they have is $117 a share, to the average $150 a share, which is a little bit above the price that it is at right now. And then the high $180. I am more optimistic, and I do believe it will go more to the 180, but that's just my opinion. None of this is financial advice, guys. Don't buy a stock just because I bought it or maybe because other people bought it. Just always do your research. As you can see today on February 6th, already pre-market, it is up another 0.78%. So if you see in the past couple of days, after it took the dip and then it took another dip to the 130s, it has been growing in the past couple of days. So you got to keep an eye on this, especially I put a little bit more into this company off start, because I didn't want to happen to me the same thing that I did with Amazon, which pretty much Amazon is already in the $170, and I bought it on October 20th, which it was pretty much right here. This is when I started my position in Amazon, and then I saw another dip. I didn't buy. I don't know. I think I didn't have any money. I was waiting to get paid. I think it was on October 25th. And I started my position right here on October 30th. And then when I wanted to add some more to the position, it just started growing into the 130s. Then it kept going up to the 140s. And I'm like, it's going to take a dip. It's going to take a dip. And it just never did. It just continued to go up and up and up. And after announcing earnings, it went up to the $170 right here. So Amazon is one company that I also like a lot. I got to start building this position. But as of right now, I'm going to focus a little bit on Google because it's still down. So I want to buy some more this week. I'm hoping, let me see if I have a couple of dollars today or tomorrow. So I can buy a little bit more while it's still in the 140s before it goes back up to the 150s. But this is the position that I added in here. Let's go into my growth portfolio spreadsheet. As you can see, I've added Google right here in the fourth spot. And my portfolio's performance right now, it is up 2.91%. My best performing stock, it is Amazon at 35% upside right now. But I only have $20 invested in this company. I definitely wish I would have put more money. But things happen and it's okay, you know. All you gotta do is just continue, right? Just continue to move forward. FNILX, which is my Fidelity Zero Index Fund, the performance on it is 10.47%, and then VGT 16.6%. I bought my cost per share in VGT is $433. Right now it's at $505. I'm gonna continue buying this one, and I'm planning on holding for a couple of years before taking any gains for the dividend portfolio. But I'm going to continue buying and buying more. I am going to be very bullish on the technology sector, pretty much on technology. So these are going to be the positions that I'm going to be adding or continue to add to the portfolio. And I'm going to continue to grow them. Also, another thing that I wanted to show real quick. One of my subscribers, Jeremy, he put a comment in the comment section, and he said, I remember old commercials talking about for the price of a cup of coffee a day. Coffee was a lot cheaper back then. Yeah, definitely it was. I'll make you a deal, Jay. I'll start adding a little into my V, which is Visa. If you start adding into AAPL, I've neglected V since it's been on such an upswing, and adding into holdings on a dip but I never miss my Apple payment each week. That's awesome. That's an awesome strategy. I've been taking advantage of the dips in Google and Lockheed. I got to take a look at Lockheed Martin actually at that stock. I know a lot of people have been buying also. Also added a little extra to Starbucks. I'm sure that's what you mean right here, Starbucks. When it dipped below my cost this week, I've been adding to Starbucks as you have seen in the channel also. I really like that company also. And congrats on the 500. It's an honor being one. Free coffee, hashtag free coffee club. I really appreciate your support, Jeremy. I really appreciate the compliments and thank you for everything. I did reply back that if you want to do every week of February a $10 challenge, I'm all in for it. Of course, none of this is financial advice, guys. You do it at your own discretion. But I'm all in for it. You know, just reply back to my comment. I don't know if you have replied back or you didn't. If you did or you didn't. But I'm definitely all in on it. A friendly challenge right there, which is awesome. I really like to interact with you guys. All right, everyone. So this is my growth portfolio right here. I'm definitely excited about it. I have a market value $600, which I'm very happy about. Please let me know in the comment section. What is your Google position? Like, how much do you own of Google? I really would like to know. I definitely started a very small one with $50 right now. I have $50 and $49.87 invested into this company. And I am excited for it, actually. I'm really excited that I bought it. One that I bought, I want to buy a little bit more, probably tomorrow. It's going to be Tesla, or today maybe, because right now it is at $181. And my cost per share is $220, so I want to bring it down a little bit more. I believe in Tesla long term. I hope they fix their issues with Elon Musk. Yeah, because he's the one keeping the company this high, honestly. So I hope that they do fix those issues. Because I don't want it to just be a car company, in my opinion. I want it to be a tech company. That's why I invested in it. I invested in it for the long term, and just because they're not just a car company, they are going to offer more services. They're building other newer things like robots and chips and all that stuff. So, and that I do believe is going to be the future. Just my opinion. So let's see what happens, right? All right, everyone. Please don't forget to hit the like button, subscribe to the channel, leave me your opinion in the comment section, and I'll see you on the next one. Thank you. Disclaimer, I am not a financial advisor and this is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.